It's not quite the speed of Austrian daredevil Felix Baumgartner, but the borrowing costs of Portugal and Greece continue to fall. Greek yields at their lowest in over a year, Portuguese yields their lowest since Q1 last year. I'm Jamie McGeever and this is today's Market Pulse. Well, I'm joined in the studio by Reuters bonds correspondent Will James. Well, let's start with Portugal. The yields are lowest today since March last year. And it's hard to believe, but earlier this year they were almost 20%.
Yeah, there's been a clear softening in attitude towards Portugal, not least driven by the ECB and what they've promised to do. All right, Portugal doesn't have market access at the moment, and the ECB isn't buying their bonds yet. But talking to one of the major banks this morning, in their note, they're saying 20 minutes after the ECB starts buying anyone's bonds, Portugal has full market access. It's not a big leap to see them back issuing debt on schedule. Yet,
if you take the other side of the Portuguese story is a budget being announced today. It's going to be pretty severe. Protests on the streets and maybe recession looms again. Hardly the environment to be buying their bonds.
No, perhaps not. But look at the problems elsewhere in the Eurozone, and there aren't really any trouble-free investments anymore. Even Germany has its issues domestically too. So politics is a real important factor in this. But there comes a point when investors are so hungry for yield, for return, low interest rate environment, they just have to put their money somewhere, and perhaps some of them are starting to do that now in Portugal.
And what's liquidity and volume like in Portuguese bonds?
Yeah, having said that, liquidity isn't great. It doesn't take an awful lot of buying to move these yields quite a long way. There is some coupon repayments being made from existing Portuguese debt, which will help liquidity in that market. Some of that money could well be reinvested in Portuguese bonds over the next few days. So.
Liquidity. If liquidity and volume is quite light in Portuguese bonds, it's almost non-existent in Greek debt, I imagine.
Yeah, absolutely. And the moves we've seen there have been really big today. It's driven by a range of things, but most of all, it's driven by the change in Germany's attitude over the last weeks. It's not something that happened over the weekend, but we had Merkel in Greece. They're softening. They're taking that risk of a Greek exit off the table, and that's bringing yields down.
And of course, we had Willem Buiter at Citigroup, who had called a 90% chance of Grexit. So-called Grexit is now down to 60%.
Yeah, absolutely. And that's what's going on all throughout the Eurozone. That's what's helping Portugal too. And that's what's helping Greece.
Finally, then, if who's trading in these bonds then? If most of Greek debt is in the hands of the ECB, EU, and IMF? Yeah,
it's a good question. We'd love to know. We talked to brokerages, and they say today they're not seeing a huge pickup in activity. So whatever's going on out there is small. If it doesn't take much to move Portugal, it takes even less to move Greece at the moment. So.
Okay, Will. Thank you very much. Well, Deal Zone is our look at major M&A activity. Today is Japanese mobile operator SoftBank, who says it will buy up to 70% of Sprint Nextel Corp. That's the third largest US carrier. The deal is worth around $20.1 billion, the most a Japanese firm has ever spent on an overseas acquisition. The deal will give SoftBank entry into a US market that is still growing, and it will also allow Sprint to expand its 4G network and compete in a market dominated by AT&T and Verizon. Finally, a look back into the archives. On this day in 1929, US stocks are already down 11% from their September peak, but the head of one of the nation's largest brokerage operations says not to worry. National City Bank's Charles E. Mitchell says the markets generally are now in a healthy condition. 12 days later, the market crashes, signalling the onset of the Great Depression. Well, on that happy note, that's all for today. Do check out our special reports on Starbucks and how the coffee giant avoids paying taxes in the UK. They're available on demand right now. I'm Jamie McGeever. This is Reuters.